VYM's 72% crushed VO's 42%. That's 30 grand more on every 100,000 you invested over 5 years. VYM's 30 percentage point lead over VO shows dividend stocks dominated mid-caps over this 5-year stretch. VYM's 7-point lead over VO proves consistent. 60% versus 53% shows value stocks winning across every time frame. VYM's pulling ahead with 21% returns versus VO's 17%. That 4-point edge keeps showing up consistently. VYM's the race car here, crossing the finish line 72% ahead, while VO's barely halfway there at 42%. Same track, wildly different engines. VYM's sharp ratio of 0.6 crushes VO's 0.3, delivering twice the bang for your risk buck. VYM's Sortino ratio doubles VO's, meaning it delivers twice the downside-adjusted returns when markets crash. VYM's 14% volatility versus VO's 18% means calmer rides through market storms, easier on your nerves and wallet. Think amplifier knobs. VYM cranks up to 0.6 with low noise, while VO barely hits 0.3 with more static. Better signal, less distortion. VYM's defensive nature means you'll feel 30% less pain when markets crash compared to VO's full exposure. Both VYM and VO move in lockstep with the market. Same direction, just different intensity when volatility hits. Both dance partners follow the market closely, but VYM takes gentler steps at 0.7 beta, while VO mirrors every market move perfectly at 1.0. VYM's 16% drop versus VO's 28% crash shows how dividend stocks cushion the blow when markets tank. VYM recovered 10 times faster, bouncing back in just 61 days while VO needed nearly 2 full years. VYM crushes VO across the board. Higher returns at 72%, better risk control with half the drawdown, and superior risk-adjusted performance everywhere you look. VYM's like a quick stumble, down 16%, back up in 2 months. VO, that's a brutal fall, taking nearly 2 years to climb back from that 28% tumble. VYM's higher yield means an extra $800 annually on every 100,000 you invest here. VYM's like finding an extra $800 a year in your couch cushions compared to VO. That's real passive income hitting your account. VYM's loading up on financials at 21%, while VO keeps it lighter at 14%, a 7-point gap. VYM's 11% consumer defensive allocation beats VO's 5%, giving you more recession-resistant companies that sell everyday necessities people can't skip. VYM's built like a storm shelter with 11% consumer defensive stocks. VO's just camping at 5%. Guess which one survives the economic hurricane better? VO's betting bigger on fewer companies with 295 holdings, while VYM spreads risk across 569 for broader diversification. VYM's extra $20 yearly? Totally worth it when you're getting that 30-point return advantage over VO. VYM costs just 1 extra slice out of 5,000 compared to VO, but delivers a pizza 30% larger. Superior performance swallows the tiny cost difference. VO's bigger asset base doesn't guarantee victory. It's losing this matchup despite managing $20 billion more than VYM. VYM crushes VO across all 6 metrics. Higher returns, better risk protection, faster recovery, and more income generated. So which fund matches your style? VYM if you want steady income, VO if you're chasing bigger growth. VYM's the marathon runner pacing steadily with regular dividends, finishing strong. VO sprints hard but stumbles more, taking longer to bounce back from losses. Legal stuff here. This isn't financial advice, just educational content for learning purposes. Subscribe for weekly head-to-head battles where we expose which funds actually deliver with real data-driven analysis.